Marks & Spencer's shares surge as profits soar. Welcome to Market Insight, I'm Ramzan Karmali. The British retailer M&S reported a 58% rise in annual profits. That was ahead of market expectations. The company delivered strong sales growth in both its food and clothing divisions. In fact, Marks & Spencer said it was in its strongest financial health since 1997. Well, to help analyse those results and much more, I'm joined by Stanić, Head of Global Equities at Artemis. Alex, thanks so much for joining us. Well, let's start by looking at those M&S results. Has the retailer finally turned the corner?
I think there are some good signs of that. One of the things, one of the themes we're seeing with results is underpinning this sort of the numbers you're seeing is the resilience of the British consumer. Obviously, consumers have been under some pressure for some time, but what you're seeing across many results, actually, including the work that's been done at M&S, is actually greater resilience. And that feeds into a bunch of other things, which I think we'll talk about in a minute. But that's something we've been watching carefully. They've had great numbers in food. You see the like-for-likes there have been very strong. So that's quite an impressive showing.
And I suppose also M&S have invested quite a lot of money in trying to get the business up and running again. It looks like that money has been well spent eventually.
I think we've seen some interesting initiatives there. The tie-up with Ocado being one of them. The JV is yielding some interesting data there. As they've tried to innovate and build on the strengths and really reposition the company over the last few years. And again, it's providing good value for money. It's getting traction with consumers. And it's good to see that coming through.
Well, another big climber today is Mitchells & Butlers, the pub chain. They posted some pretty decent results. You talked about consumer confidence. I think this is one example where it is definitely a beneficiary.
Yeah, it's fantastic to see these the numbers coming through at Mitchells & Butlers. Obviously, the chain was hard hit by what happened at COVID. We're continuing to see that recovery coming through. You're getting operational benefits. The costs is coming down. The debt is being repaid down. And like-for-like sales, which is obviously harder to predict. We obviously had a good number here. Almost closing up in double digits, but a little bit below that. If you see that sort of people going back to the pub, if you will, as we go through the summer. If you have a good showing in the Euros, you might even see that carry on. But in the meantime, the thing is, they can control for costs, debt being paid down. It's going in the right direction. So the result is quite good, good operating leverage around that. So it's very good to see that coming through.
I guess the results everyone will be watching tonight, those Nvidia's. What are you expected to hear there?
Yeah, Nvidia's been an extraordinary stock over the last year or so now. If you look at the performance of the business, the stock is actually up a couple of 100%, which is a massive move. If you then step back a little, look a little longer term, you look at the earnings trajectory over that period, and earnings expectations are up by over 300% over that period. And the company's continued quarter by quarter to come in way ahead of expectations. Now, predicting very short-term oscillations in the earnings is difficult, but if you look at that long-term trend, and some of the signs we've seen from the hyperscalers who had results over the last couple of weeks, the capex spend with the hyperscalers is up 25% or so, which is a very large number indeed. And that underpins a lot of that hyperscaler spend goes into Nvidia's core products, the GPUs. So that has remained very robust. You could anticipate that trend carrying on not just this quarter, but quarters beyond that.
Now, we had UK inflation data out earlier today. It eased sharply, but not by as much as many had hoped for. What does this actually mean for equity markets? In particular, I noticed the FTSE down today. Is that partly affected by today's inflation number?
You can see some disappointment in terms of maybe the expectation of Bank of England's rate cut, which some had anticipated being around about the middle of the year, being pushed back a little bit. But it fits a greater pattern. So if you look at the spread of what central banks have been dealing with over the last couple of years post-COVID, it's been very difficult to accurately predict how those expectations have played out. The Fed in the US has seen a resilient consumer. Rates are going to take a little bit longer to come down versus expectations, whereas in Sweden, they're ahead. They've already cut. The ECB is a little bit also more likely to cut given the economic data, whereas the UK sits a little bit more towards the US, but surprisingly resilient. Inflation's a bit sticky. It's still coming down, slowly but surely. And we'd expect that direction of travel to continue, even if it's not as immediate as some might hope, which you can see in market moves today, especially on the FTSE. A little bit of disappointment there.
Stanić from Artemis, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.